Good morning, I'm Maiki Oreta, and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The Bangko Sentral ng Pilipinas expects inflation to climb as high as 1.9% in June, a sign that price pressures may be creeping back. The Department of Budget and Management backs calls for transparent bicameral hearings on the proposed 6.8 trillion national budget for 2026. The Philippine government lowers its alert level in Israel from level 3 to 2 just days after a ceasefire with Iran takes effect. Let's take a look at how global markets moved overnight, with investors reacting to trade signals and rate cut hopes. U.S. stocks closed higher on Monday as progress on trade deals with China and the United Kingdom lifted investor sentiment. Investors over there are hoping for more breakthroughs before President Donald Trump's July 9 trade deadline, and a possible rate cut is adding fuel to the rally.
I believe that stocks are performing pretty decently in general, and especially today as part of a little bit of a relief rally. We are experiencing a little bit of month end, so there could be some window dressing, people getting more fully invested, putting cash to work in the market as well. So that tends to influence the year-end period, month-end period as well. One of the things that I'm very thoughtful of is we continue to see further progress with regard to the tariff situation and the trade war. And as that happens, people feel more comfortable investing and putting their cash to work in the market, and I think that's what we're experiencing.
The Dow Jones Industrial Average picked up 0.6%. The S&P 500 gained 0.5%, as with the Nasdaq higher by 0.5% as well. Over in Europe, it was a different story. The FTSE 100 slipped 0.4%, Germany's DAX lower by 0.5%, and France's CAC 40 down by 0.3%. Here at home, the Bangko Sentral expects inflation to pick up slightly in June, potentially hitting 1.9%. The BSP's latest forecast puts inflation between 1.1 and 1.9%, a touch higher than last month's 0.9 to 1.7% range. The upper end also surpasses May's actual print of 1.3%, suggesting price pressures aren't fully gone. The central bank cites rising meat, vegetable, and oil prices, plus a weaker peso as the main drivers. But with inflation still below 2%, the case for a rate cut by the Bangko Sentral ng Pilipinas remains on the table. Even with inflation low, the Philippines' external position remains under pressure, raising questions about peso stability and capital flows ahead. The Bangko Sentral ng Pilipinas expects a balance of payments deficit of $6.3 billion next year. This is equivalent to 1.3% of our GDP. By 2026, that deficit will slim to $2.8 billion, or just 0.5%. The current account gap is wider at $16.3 billion in 2025 before improving to $13.6 billion in 2026. Business leaders track this closely because sustained deficits can weaken the peso, impact import costs, and deter foreign investment. Union Bank's chief economist, Ruben Asuncion, calls the BSP's forecast realistic, but warns that geopolitical shocks or a trade slowdown could throw those numbers off course. Budget Chief Amenah Pangandaman is throwing her support behind greater transparency. This includes opening up BICAM budget talks to the public. The push was first floated by House Speaker Martin Romualdez and has since gained traction with Senators Risa Ontiveros and Panfilo Lacson. It comes as the Development Budget Coordination Committee, which Pangandaman chairs, approved a record 6.8 trillion peso spending plan for 2026. That's up 7.4% from this year's budget and sets the stage for another high-stakes debate on where public funds should go. The Board of Investments greenlights 3.4 trillion pesos worth of projects under its Strategic Investment Priority Plan, covering mid-2022 to the end of 2024. BOI Chief Investment Specialist Marian Jenlu Reyes says the big money is flowing into three sectors: renewable energy at 2.6 trillion, digital infrastructure at 295.1 billion, and logistics and supply chains at 168.2 billion pesos. The agency is now crafting a long-term blueprint through 2028 to draw in more future-ready, high-impact investments. Philippine exporters are in limbo as the United States prepares to lift its tariff pause next week under President Donald Trump's trade reset. Foreign Buyers Association President Robert Young says exporters still have no clarity on what rates Washington will impose, adding to uncertainty for Philippine goods headed to the United States. But there is a sliver of optimism. U.S. Treasury Secretary Scott Bessent recently said talks with the Philippines have gone well. According to a Bloomberg report, Trump may still impose duties above the 10% baseline for most countries, but final rates have yet to be announced. Here at home, despite escalating global volatility from the Middle East to the West Philippine Sea, real estate leaders see a strategic window for the Philippines to stand out. Sujin Kim has the details.
Philippine property is gaining attention as a regional safe haven backed by interest rate cuts, foreign ownership programs, and strong demand from expats, offshore investors, and multinational firms.
In terms of environments, this is probably the most volatile environment that we've seen. We see that as an opportunity for the Philippines and obviously for the real estate market.
The proposed 99-year lease law, energy-focused REITs, and a rebound in tourism are expected to bolster capital inflows in the second half of the year. In the residential segment, demand for high-end condominiums remains strong, particularly in Makati and BGC, driven by affluent young professionals, foreign families, and returnees.
Especially as we're seeing an influx in record enrollment in some of the international schools and also some of the multinational and their families returning to the Philippines, and a lot of those going towards high-end condo living.
In the office sector, first quarter 2025 recorded a net absorption of 192,000 square meters, the highest since 2019. Taguig and Makati remain the most expensive districts, with rents above 1,200 pesos per square meter per month.
So we've essentially gone threefold in the amount of office space in Metro Manila over the last 10 years. It means that this is a strong growth year in the office market so far.
While vacancy rates in non-CBD locations remain above 20%, demand is expected to shift. The firm's recommendation:
so companies maybe who don't need the most premier location, do not need the newest, fanciest buildings, are maybe looking for just quality BPO space that is kind of no frills. We're going to see them look a little bit more at Ortigas QC, a little bit of the Bay Area, especially around MOA, and then Alabang as well.
The REIT market is evolving beyond BPO office towers, now including energy infrastructure and retail assets, offering developers a tool to unlock capital for new projects.
So we see REITs being an efficient way to launch a business, recapitalize a business, and also to circulate that capital for reinvestment. So we see REITs being active as well, and that will make the market incredibly efficient.
In the industrial segment, data center investments are accelerating. Over 900 megawatts of capacity are in the pipeline, led by players like PLDT Vitro, Digital Edge, and Singapore's STT. In the next 6 months, inflows to property funds, data infrastructure, and mixed-use developments are expected to rise, fueled by policy tailwinds, regional positioning, and investor appetite for long-term value amid global uncertainty. Sujin Kim, Bilyonaryo News Channel.
Tourist arrivals may be down, but the Philippines is betting on Filipinos abroad and Indian tourists to fill the gap. Foreign visitor arrivals dropped to 2.54 million from January to May, down 1.2% year-on-year. But arrivals from overseas Filipinos surged nearly 29%, topping 217,000. The United States, Japan, Canada, Singapore, United Arab Emirates, and Australia led the pack as Filipinos continue to travel home in strong numbers. Tourism officials are also banking on India after online searches for Philippine travel jumped 60%. Manila has since lifted visa requirements for Indian tourists, hoping to turn clicks into bookings. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on Asian markets this Tuesday morning. Right now, the Nikkei 225 is in the red, lower by 0.8%. Hong Kong's Hang Seng Index in the red as well, lower by 0.9%. Shanghai's Composite flat with an upward bias, and Singapore's Straits Times Index higher by 0.8%. Here at home, Philippine shares fell Monday as investors took profits ahead of this week's key data, including June inflation and business confidence. The PSE Index dropped 0.7% to 63.65. Starting today, the stock transaction tax drops from 0.6% to 0.5% under the Create law. It's a small cut but a loud signal. The move shows government intent to stir up liquidity and bring more retail investors into our market. Over the near term, analysts expect sideways trading for the PSE Index until the inflation print comes out. If price pressures cool, that could build the case for a rate cut by the Bangko Sentral. Now, checking on the PSE Index as of 10:17 this morning, the main gauge is in the green, up by 0.5% to 63.98. The broader all shares index is in the green as well, up by 0.3%. The sub indices are all looking pretty bullish, all in the green, with the mining and oil counter up the most, up by 1% in early trade. Total volume is at 336 million shares, valued at a little over $1 billion at 1.1 billion. Now we've got a positive market breadth with 72 advancers, 52 decliners, and 36 stocks unchanged. In the currency markets, the peso opened stronger at 56.25 to the dollar, firmer from Monday's close of 56.33. Now, on the corporate front, Ayala Land bags a prime piece of Makati, completing its acquisition of the 598-room New World Hotel. The deal beefs up Ayala Land's hospitality arm, with plans to keep the hotel running and service levels high under the Ayala Land Hospitality brand. The group's portfolio now spans everything from said hotels to the Mandarin Oriental in Makati, which is set to open in 2026. New World Hotel sits right across Greenbelt, and it's within walking distance of key office towers. It's a strategic move that tightens Ayala Land's grip on Makati's commercial core. Jeep Philippines is shifting gears after decades of conquering trails. The iconic American brand now under a
Jeep has been a fixture on Philippine roads since 2004. Originally brought in by the CATS group of companies of Bilyonaryo Felix Ang. It is the same firm behind luxury badges like Mercedes-Benz, Jaguar, and Land Rover. But in 2023, the brand got a boost of global horsepower when British automotive giant Inchcape took a 60% stake in the CATS group, signaling a new era for Jeep Philippines. And it's not just about bigger backing. Jeep is now changing how it connects with customers.
For Jeep, the challenge is to make the client understand that you don't really need a 15-inch touchscreen, really, right? But what you do need is something with personality that's ready for adventure.
While other brands bet on tech, Jeep is betting on something more analog. A lifestyle built on dust, mud, and mountain trails. That means giving customers more to play with.
When you buy a Wrangler, start off with tires, accessories, and so on. And this is what we found out over the years, that this is what clients are looking for. And so this is starting to move the Wranglers better than usual.
And it's not just hardware. The brand is banking on community building.
We want to start holding these off-road events more often and get more people joining with their Jeeps. Maybe we could start out with softer trails and then eventually going into hardcore. Because when we did that event, actually, it's in this event, you know the difference of buying a typical 4x4 car.
Just like the Jeep Wrangler, I have always been all about the outdoors and up for a little adventure. And tonight, we're taking it all with the tops off.
To showcase their new direction, Jeep Philippines hosted a night of workshops, garage sessions, and test rides, inviting buyers, partners, and the media to get hands-on with the lineup. Jeep even timed how fast the roof comes off. Just a minute and 21 seconds to go from city mode to trail ready. The Wrangler lineup includes the 4-door Sport, 2-door Rubicon, and 4-door Rubicon. For a brand that began in 1941, Jeep isn't just selling vehicles, it's selling freedom. For BNC Mobility, G. Baroga.
We're taking a short break. Business 360 will be right back. Welcome back. A 50 peso pay hike is coming from Metro Manila's minimum wage earners, but it falls short of what lawmakers want. The Senate is pushing for a 100 peso increase. The House double that at 200. Hannah T. reports.
If you're a Metro Manila worker, then you're about to see a little extra in your pay envelope. Starting July 18, the daily minimum wage in NCR will go up by 50 pesos, thanks to wage order number NCR 26. Workers in the non-agriculture sector will now get 695 pesos a day, while those in agriculture, retail, and small manufacturing will receive 658. The Department of Labor says this is the highest pay adjustment ever approved by the NCR Regional Tripartite Wages and Productivity Board. But for Senate President Pro Tempore Jinggoy Estrada, it's not enough. Although it's a welcome development, he believes Filipinos deserve more. What workers need is a pay increase they can actually feel. He points to rates in other regions, some as low as 361 pesos per day, and says no family can live decently on that. Estrada, who led Senate hearings on wage issues in the 19th Congress, says a nationwide pay hike is due, not just for NCR. The goal is simple, to make work pay enough for workers to actually live. That is why Estrada is refiling his bill this 20th Congress that seeks a 100 peso nationwide daily pay hike, the same bill that the Senate passed in the previous Congress. Fellow lawmaker Senator Bongo also filed a bill seeking a 100 peso across-the-board daily wage increase for minimum wage earners.
Bawat piso, bawat sentimo ay napakahalaga po sa ordinaryong manggagawa. Kaya dapat taasan na po ito. Kulang yung 50 sa NCR. Sa totoo lang. Habang tumataas yung bilihin ay kulang po yung 50. Kaya sana po'y maipasa itong 100. At dapat nga, noon pa ito eh. Nandiyan na, pinasa na namin dito. Sayang naman, pinaghirapan natin ito na maipasa.
The House of Representatives has also approved its own version, a proposed 200 peso minimum wage hike for private sector workers under House Bill 11376. The final decision now rests with the President. President Bongbong Marcos is studying the proposal carefully, according to the palace, promising to balance the needs of workers and the concerns of employers. If signed into law, this will be the first legislated nationwide wage hike since 1989. Hannah Tia, Bilyonaryo News Channel.
Good news at the pump. Fuel prices are rolling back starting today. Gasoline is now down by 1 peso and 40 centavos per liter, diesel by 1 peso and 80 centavos, and kerosene by 2 pesos and 20 centavos. The cut comes on the back of easing tensions in the Middle East after U.S. President Donald Trump announced a ceasefire between Israel and Iran. Rice is a political flashpoint, and President Bongbong Marcos is walking a tightrope between consumer relief and farmer survival. He says farmers will still get a fair price for palay even as the government pushes ahead with its 20 peso per kilo rice program. The president made that statement Monday in Nueva Ecija during a farm machinery turnover ceremony. It comes amid growing concerns that the administration's affordable rice target could lead to depressed farm gate prices.
Nag-aalala yung ibang yung ating mga magsasaka dahil binababa natin ang presyo ng bigas sa 20 piso kada kilo. Paano ngayon ang mga farmer? kahit anong presyo ang pagbenta natin ng bigas sa palengke, hindi magbabago ang buying price ng palay ng NFA.
Right now, many farmers say they're selling palay at 15 pesos to 18 pesos a kilo, barely enough to cover costs. They support lower prices for consumers but warn that if farmers keep losing money, supply and livelihoods will dry up.
Ang mura-mura ng bili ng palay namin at pagkatapos naman, ang insecticide, ang abono, ang binhi, napakamahal sobra. Tapos kulang na lang na ipahingi yung aming palay kasi ang mura ng bili.
Kasi mayroon tayong tinatawag na middleman eh. Yun ang nagpapahirap sa mga magsasaka. Kung tutusin, ang mga middleman, yan ang yumayaman, hindi kami. Kami, naghihirap kami. Doon kami sa initan, doon kami sa lahat na mga mahirap na trabaho. Ngayon, ang ano lang namin, ang hinihingi namin, ang kaunting konsiderasyon na itaas naman nila kaunti palay.
From food security to a political flashpoint, Senator Risa Ontiveros is now facing an ethics complaint as tensions escalate over the Senate probe involving the Duterte family and Pastor Apollo Kibuloy. Former Duterte spokesperson Harry Roque is accusing Ontiveros of witness tampering in connection to ongoing hearings linked to former President Duterte, Vice President Sara Duterte, and the detained religious leader. But the senator isn't backing down.
Bukas sa kahit sinong mamamayan na mag-file ng ethics complaint, pero parang si Harry Roque ang maraming sinasabi. Umuwi muna siya. Humarap muna siya dito sa Senado. Haharapin ko siya kahit saan. Pero ngayon, bitawan na niya yung buhay pugante niya.
Ontiveros released proof showing Senate witness Michael Murillo initiated contact and followed up while her office verified his statements.
Nasaan dyan ang pinilit? Muli, siya ang una at paulit-ulit na lumapit. And these are people who were already afraid. Now they are in danger. Again, yan ang talagang kinagagalit ko. Hindi lang ito paninira.
Senate independence, with stakes rising ahead of possible impeachment proceedings. Now, from national drama to local accountability, Isko Moreno is back as Manila's mayor, and he's starting with a familiar fight, cleaning up the capital. Moreno plans to declare a state of health emergency over Manila's garbage crisis, blaming what he calls negligence by the previous city government.
It's terrible. It's everywhere. In the eskinita, sa kanto, sa avenida, sa boulevard, sa highway. It's everywhere. Ito masakit. In fact, kausap ko rin si engineer kanina, yung nagbaha last week, o yung basura natin, nasa imbornal lahat.
He revealed that Manila now owes nearly 1 billion pesos in unpaid waste management bills, with 2 contractors still waiting to be paid. Moreno says he won't let it slide, vowing to file criminal and administrative cases against those who misuse funds for garbage collection. We're taking a short break. Business 360 will be right back. Welcome back. Israel's prime minister isn't backing down. Benjamin Netanyahu now claims that the Middle East would collapse without Israel. He made that comment in a speech to Israeli military officials, framing Israel as the region's anchor amid escalating tensions.
They have essentially built three paths to destruction. First, the choke ring, a plan to destroy Israel through the Axis. Second, a plan to destroy Israel through missile threats. Third, a plan to destroy Israel through a nuclear threat. This is the raison d'etre of the regime. It's not the only reason they want to destroy us, and we are not their main target. But in order to achieve their main goals, they must eliminate us. You can't conquer the Middle East without destroying Israel. And if Israel ceases to exist, the Middle East collapses immediately.
This statement comes just weeks after Israel's June 13 strikes on Iran, hitting nuclear facilities, killing top commanders and civilians. Iran retaliated with missile attacks, followed by a U.S. airstrike before a ceasefire took effect last week. From Israel's security claims to what it means for Filipinos on the ground, the Philippines has downgraded its alert level in Israel from level 3 to level 2, citing improved safety conditions. The Department of Foreign Affairs announced the move late last night, pointing to positive developments in Israel's security situation as the reason for that. Under alert level 2, Filipinos are still advised to limit non-essential movements, avoid crowded areas, and stay in touch with the embassy. Return travel is now allowed for OFWs with valid employment documents, though non-essential trips remain off limits. The Department of Migrant Workers estimates that around 30,000 Filipinos are currently in Israel, mostly in the caregiving and hospitality sectors. From security risks to free speech, Turkish authorities detained 2 cartoonists and an editor from the satirical magazine Limen, raising fresh questions about press freedom in an already fragile investment climate. The detention comes after the magazine published a cartoon showing 2 men believed to represent prophets Moses and Muhammad shaking hands in the sky while missiles flew below. Many viewed the image as a call for religious unity amid conflict, but it drew angry reactions from Turkish officials and religious groups. The magazine insists that the character was not the prophet, but a man named Muhammad, a common name in the Muslim world. Now, from free speech to free trade, the United States is set to resume trade talks with Canada after Ottawa dropped its controversial digital services tax on U.S. tech giants. The White House says Prime Minister Mark Carney called President Trump on Sunday to formally back down from the tax. White House Press Secretary Caroline Leavitt said Carney yielded to Trump, adding that Canada made a mistake trying to impose the tax in the first place. The turnaround marks a stark shift for Carney, who, before his election win this year, had taken a hardline stance against Trump's trade pressure. Now, fresh trade threat from Washington. U.S. President Donald Trump is targeting Japan, accusing it of shutting out American rice and threatening a 25% tariff on Japanese cars. In a post on Truth Social, Trump claimed Japan refuses to buy U.S. rice, despite trade data showing it imported nearly $300 million worth last year. The warning comes just days before his July 9 deadline, when the 90-day pause on reciprocal tariffs expires. White House officials say talks with Japan are still ongoing. For global investors, this escalation could rattle Asian supply chains and auto exports. For the Philippines, a tariff on Japanese cars could mean higher prices locally and risk spillover tensions in regional trade talks. Now, major policy shift from Washington. The White House says U.S. President Donald Trump will sign an executive order lifting sanctions on Syria. The move follows Trump's announcement in May, which is aimed at helping Syria rebuild after years of civil war. It's a potential opening for infrastructure and energy investors as the country looks to rejoin the global economy. The U.S. had imposed sweeping sanctions, including asset freezes, travel bans, and trade blocks, alongside international restrictions tied to Syria's designation as a state sponsor of terrorism. Lifting those sanctions could reset ties with the region and create new opportunities for labor exporters and construction firms in countries like the Philippines. And finally, a case that could change tech for the better. As Apple faces a major antitrust lawsuit in the United States, developers and startups around the world, including here in the Philippines, are watching closely. The case targets Apple's control over super apps, cloud gaming, texting, smartwatches, and digital wallets. Technologies that have the power to level the playing field if opened up. Judge Julian Niels says Apple's market power deserves full scrutiny. And if the government wins, it could pave the way for more competition, more innovation, and more choices for consumers and developers alike. For Philippine tech entrepreneurs looking to go global, this could open up new doors. A reminder that even in the shadow of big tech, smart ideas still have room to grow. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.